Hi, my name is Daniel Song, and my project is a stock price movement prediction based on multi-stage financial models and cross-period comparison. Many people have a vivid memory of the stock market crash in March of 2020 due to unbridled global fears about the spread of COVID-19, oil price drops, and the possibility of a severe recession. Four circuit breakers in only 8 trading days ended the longest bull market in the history of the United States. However, the market rebounded dramatically in summer, resulting in the shortest bear market in US history. 2020 was a hectic year for both Wall Street and the world, with unprecedented volatility and numerous risks and opportunities. How should an investor rely on a calm mind and rational analysis to make the most appropriate investment decisions? And what would be the best approach to improve the accuracy of stock price projections? I have used Johnson & Johnson as a microcosm to conduct fundamental analysis in stock price prediction through two steps: a qualitative analysis comprised of micro and macro analysis models, which are Porter's five forces, SWOT, and PESTLE. These three analyses aim to present a deep, thorough, and detailed dissection of Johnson & Johnson's business. I have also conducted a quantitative analysis comprised of a multiple linear regression to select the most normalized time period for financial modeling, and the financial modeling itself comprised of absolute valuations using two-stage FCFF model, relative valuations with a price multiples comparison and sensitivity analysis, as well as a 3 scenarios price. All of these will be aggregated in the football field analysis valuation range. Johnson & Johnson is a 135-year-old healthcare conglomerate and one of the world's leading health companies. It operates in over 60 countries and is divided into 3 segments: consumer health, pharmaceutical, and medical devices. The first qualitative model is a micro Porter's five forces with supplier bargaining power, competitive rivalry, consumer bargaining power, the threat of substitutes, and threat of new entrants evaluations. The second microanalysis model is a SWOT, comprised of strengths, weaknesses, opportunities, and threats to the Johnson & Johnson business. My macro qualitative model is the PESTLE, or political, economical, social, technological, legal, and environmental factors. My multiple linear regression is one of the most important aspects of my project and a key part of my innovations. Under normal circumstances, financial models are based on financial data from the past most recent 5 years. However, considering the impact of COVID-19, the multiple linear regression aims to assess different time periods to find the most normalized period for financial input for forecasts later on, not to predict stock prices. The first step in the multiple linear regression is to select variables. 5 variables denoted by X1 net earnings, X2 capex, X3 working capital, X4 EBITDA, and X5 interest rates have been selected as the independent variables. I've tested a multi-collinearity and excluded the variables with collinearity. To do this, I've set a correlation coefficient of 0.7 as a criteria and conducted a data analysis through Excel. In my data analysis table, we can see that X1 and X4, as well as X2 and X3, have a significant statistical correlation. To prevent independent variables from having a statistical correlation, I've chosen 2 sets of variables for the regression modeling. The first set being X1, X2, X5, and the second set being X1, X3, and X5. All of these data is from 2011 to 2020 annual reports. The next step is to run the regression models themselves, conducting a cross-peer comparison with 2014 to 2019 data, not considering the impact of COVID-19, and a 2015 to 2020 data, i.e. considering the impact of COVID. The dependent variable has been set as the average annual stock closing price. The final step is to choose the most accurate model. I've done this by looking at the significance F value of each table. We want the significance F to be as low as possible and less than 0.05, which meaning our null hypothesis has been proved false. The null hypothesis states that there is no significant statistical correlation between the variables, which is what we do not want. We can see that X1, X3, X5, and 2014 to 2019 is the most suitable set of data to use for the financial model. my quantitative analysis also has an absolute valuation with a two-stage FCFF model. This model sums the present values of free cash flow to the firm, or FCFF, in both the high growth phases and stable growth phases of the company to arrive at the final fair value of the firm. The two-stage FCFF calculations are shown in these tables. It is worth mentioning that I use data from 2014 to 2019 as per my multiple linear regression results. There are two main variables in the FCFF calculation. The first is WACC, or weighted average cost of capital. This is a percentage rate that the company is expected to pay on average to all of its security holders, meaning both debt and equity, to finance its assets. The second variable is G, and the growth rate, which is the FCFF growth rate. I have forecasted G using a simple linear regression. We can see that from these assumptions, the final Johnson & Johnson forecasted stock price is $198.39. However, since the future cannot be predicted with any certainty, I've also conducted a sensitivity analysis to demonstrate how even a minute change in either the WACC or long-term growth rate can have a significant impact on the forecasted stock price. These present the desired results under different financial circumstances. A second quantitative analysis is the relative valuations using a price multiples comparison. These aim to compare Johnson & Johnson's financial ratios such as price to earnings, PB, which is price to book value, and PS, price to sales, as well as EV to EBITDA. These show that Johnson & Johnson has good ratios compared to its industry peers. I've also done a financial modeling price target. These are conducted by the EV to EBITDA ratios to forecast three scenarios: a blue sky or optimistic scenario, a gray sky or pessimistic scenario, and a target price. These all depend on how EBITDA is estimated. EV is the enterprise value. This can be calculated by using our forecasted ratios and EBITDA. Subtracting net debt from EV divided by the shares outstanding gives us the target price. I've conducted a business or qualitative analysis, which offers a detailed dissection of Johnson & Johnson's business model to find out both its strengths and challenges, as well as micro and macroeconomic factors that impact the company. I've also conducted a quantitative analysis using a multiple linear regression, which concludes that the 2014 to 2019 data period is more accurate for predicting stock prices under normal circumstances instead of the conventional most recent 5 years. My two-stage FCFF model may be too optimistic, as COVID-19, increasing inflation, and supply chain pressures may affect the growth rate. My relative valuation offers an expected range, allowing for improved or deteriorated forecasts. In conclusion, I have aggregated all of these ratios and price targets in the football field chart to summarize different valuation models. Johnson & Johnson stock presents good value with a price range of $155 to $185. All of these predictions are based on no major changes in the Johnson business structure. However, management of the company recently announced that they will be splitting the company into two in the near future. This brings me to my future work. It will include comparing my predictions with the 2021 annual report, as well as introducing more micro and macroeconomic variables to forecast a stock price using multiple linear regression and a principal component analysis, or PCA. These models used are also applicable to other stocks in the S&P 500 and stock market at large. I will also analyze the Johnson & Johnson business split. My financial data comes from Yahoo Finance and Johnson & Johnson annual reports, which can be found on the company's corporate website. I would like to thank my advisor, Ms. Michelle Lee, for teaching me key concepts of economics and finance and offering important constructive suggestions and guidance through the entire research project. I would also like to thank my parents for supporting and encouraging me throughout this entire journey.